Hey everybody, this is Raghee Horner and this is a Raghee report tutorial. So one of the updates that I posted over at the dailyforextradingedge.com, I'm going to talk about that trade here at Baby Pips, is the uptrend, the bullish directional bias that we've seen on the dollar Canada. And you can see that the uptrend is definitely in place. Now, how am I determining this? Let's talk about what directional bias actually is. So first of all, there's an equation. It's the arithmetic of a trend, and I call it sentiment plus momentum equals trend. And that means if sentiment organizes, in other words, if people start thinking the same way long enough, they start acting, and the action powers the momentum. So organized sentiment turns into momentum. Now, if that momentum can continue, people can continue to have the same way of thinking long enough, and that momentum has plenty of fuel to keep moving higher or lower, whichever the case may be, that movement eventually creates a trend. So sentiment plus momentum equals a trend. I measure sentiment and momentum using my grab candles. Now, obviously, we could look at higher highs and higher lows within the context of an uptrend and say, yep, there's a lot of bullish sentiment here. We could look at, conversely, lower lows and lower highs within the context of, say, a downtrend. So if I want to pull up something like the Aussie, we can see that push to lower lows, lower highs, and say, yep, that's a downtrend. It's the organization that I'm after. And I'm after another thing here too, because it's not just about having the luxury of looking at just one chart. Now, when we're filming these videos, obviously we have this wonderful luxury of focusing in on one chart and talking about it and dissecting it and taking our sweet time, right? For those of you that are in the markets, you know taking our sweet time is not a luxury we have. So imagine, if you will, 2 to 4 monitors, anywhere from 6 to 8 charts on each. So now just do some simple math. If I'm working about 4 monitors with 8 charts on each, I'm looking at about 32 charts, right? 6 charts on each across 4 monitors, I'm looking at 24 charts. So imagine multiple symbols, multiple pairs, and in a glance, I want to get as much input from a chart as I can before I grab the mouse and start drawing fibos and trend lines and horizontal support and resistance, and start looking for candlestick patterns and all the other things that we do as traders to try to analyze what it is that price action is telling us about psychology. So the more that I can glean from a chart at a glance, that's what I call myself. I'm a chartologist. I trade off the charts. I believe the market psychology and the fundamentals are continually being discounted, and in that discounting, we're getting price movement, and in that price movement, I can gauge, I can measure the psychology of the market. So here, the red grab candles are indicating that bearish sentiment, that bearish momentum, just as on the uptrend on the dollar Canada, I've got the organization of bullish sentiment and momentum. Now, the reason I'm starting with the daily time frame is that this is the one that gives me insight into the directional bias of the pair and allows me to understand the context with I am either going long or short. Let me explain. We all talk about trend following, but where do you determine what the dominant psychological trend of any symbol, of any market is? For me, the most psychologically relevant time frame is the daily chart. And if the daily chart's the most psychologically relevant time frame, what the trend is or isn't, in the case of a non-trending market, what it is or isn't on the daily gives me insight into whether or not a buy on the dollar Canada is a trend follow, or whether a sell, for example, would be a trend follow. In this situation, green grab candles, 12 to 2 o'clock, 34 EMA wave angle. Buys are trend follows within the context of the bullish directional bias on this chart here. If it's a downtrend, let's go back to that other doll we were looking at, the Aussie, and you'll see that shorts, selling, these would be trend follows within the bearish directional bias of this pair. Very important that that be your first determination, because you want to, as often as you can, go with the flow. You don't want to put yourself in a position where you're swimming upstream. What I mean by that is, I don't want to be long for long periods of time on the Aussie. just as I don't want to be short for very long periods of time on the dollar Canada. In fact, if I am going to go short here on this pair, the dollar Canada, it will be limited to the 5, 15, and 30-minute time frames with special exceptions on the 60. But those are exceptions. The 60 and 240 are longer-term intraday time frames that I would rather not fight the overall dominant directional bias on. That trend we see here on the daily. So that brings me to my setup, which is the 240-minute chart. The 240 here today is moving up with what I call clarity. And I'll have another video on clarity here in the near future. But what I talk about in regards to clarity is how clearly can I determine what the market psychology is using the 34 EMA wave. So the first thing is, this is kind of the step before we get into the 3 steps of clarity. Can you identify a clock angle? Is it one that you can just say, wow, those are the 3 lines of the wave, and I could easily determine that that is moving higher in a 12 to 2 o'clock angle? If you have to struggle or kind of hunt to define, to pin down what angle the wave is moving at, you don't have a clear wave angle reading. It should be very simple. It should be just like reading your watch, looking at a clock. Yep, I see what time it is, move on. If it's not that simple, if it's not something that you can glance at and make that determination immediately, go to another time frame. Simple as that. Okay? Next step. Okay, assuming you have an easy to identify clock angle, we look at the smoothness of the 3 moving averages of the wave, which are the 34 period exponential moving average, one on the high, one on the close, and one on the low. You can see that here in the green, the blue, and the red. These other moving averages here, this is the 20 period simple, this is the 89 period exponential, and this is the 200 period simple. Just other moving averages that I think are helpful in terms of dynamic support and resistance on a chart, any time frame. So are the 3 lines of the wave smooth? Because the smoothness of a moving average is very reflective of the organization of the price action. You get a lot of gaps and a lot of wicks here and there. Your moving averages are going to get lumpy. They're going to get bumpy. They're not going to have that nice smooth ascension or that nice smooth move lower. The next thing we look at is established. Is the angle that we're looking at, whatever clock angle we identified as the precursor to all these steps here, these 3 steps, is that established? How long have we been moving higher or lower in either that 12 to 2 o'clock or 4 to 6 o'clock angle? In this case, we've been moving up higher on this 4-hour chart since this arguably is the, what day would we call it? So 22nd? So about the 22nd, we've been moving higher since about then. This is August 3rd. So we've been moving up higher on this for a good bit of time, even though we had a little bit of a transition back in this area. For the most part, we've been dominated by the green grab candles, reflective of the bullish sentiment and momentum, and the wave has been able to maintain a majority of the time a 12 to 2 o'clock angle. The last criteria is only applicable in trends, and it's only applicable to trends that have corrected, such as this one. And that is the wave respected? And trade respect essentially means that wave respect within the context of price movement essentially means that we are looking at the wave, in this case, acting as dynamic support. When prices move down lower, does the wave act as a safety net, catching price action, keeping it within the confines of the 34 EMA, high, close, and low? Is it able to act as dynamic support? And in the case of a downtrend, does it act, if it has been tested, does it act as dynamic resistance? Let me show you an example on the Aussie on some intraday downtrends. So if I look at the Aussie on the, I believe it's the 60 and the 240, again, the Aussie has an overall very bearish directional bias. You can see here all the times the wave has actually acted as dynamic resistance. See that here? This here is not respect, but then again, is the wave moving down at 4 to 6 in this period of time? Let's zoom in. It is not, right? But when it does take on more of that angle, that downward sloping angle, it's acting as respect. That's exactly what I want to see. What about the 4-hour chart? So in those moments, in those sections of this chart where the wave is moving downward at 4 to 6, is the 34 EMA low, close, and high? Are they acting as resistance? Even when we weren't moving down, it was acting. That's kind of nice. You can zoom in here and notice that in this section, even when we went blue in the grab candles, lost that bearish momentum and sentiment, we still were actually able to maintain resistance at the 34 EMA high. And then once the downtrend resumed, I want to see that the wave still acts as a hand pressuring prices lower. Dynamic resistance. So that's what respect means. So once you've identified the clock angle, you then transition into asking a few key questions. Is the wave smooth? Are the three lines the moving average? How long have they been moving in that direction? Are they established? And finally, are they respected? Smoothness, established, respect. Those are the three criteria of clarity.